market, right? What happened. All right, so we started the recording. So let's take a look at what happened today. Let's take a look at the Dixie, right? The Dixie being the dollar index, which is what we've been following here on the Forex chat. Mainly the mentorship students have been really getting access to this. But yeah, we've been really, looking at the dollar in terms of recovery, right? We're looking at what the Fed says. That's all about Forex. Stocks is a little bit more, companies, financials. Yes, there is some economic attention that's given, but I wouldn't say as much as the relevance would be as to Forex, right? I mean, you can't compare the two, right? CPI, non-farm payrolls, NFP happening this week. You can't compare that to stock market, right? It's not the same thing. So, we're really examining, right, what the Fed is saying, what dollar news, right? We've been seeing this really nice recovery here over this past really week since last Wednesday, if I'm not mistaken. We got some pretty good news. We got a rate hike on the dollar. We had 0.25% interest rates, which really pumped up the dollar, right? But as we know, inflation rates are also extremely high. Let's do that. We know that the inflation is pretty high. I know that the Fed issued a statement yesterday saying that they want to reduce the rates of inflation. They want to see an overall decrease in interest rates. And they want to obviously, they want to keep the interest rates low. They want to decrease the inflation. They want to create more production. But the problem is that, we're seeing a short-term recovery on the dollar, but that short-term recovery is not going to fill in the shoes, right, of that overall downtrend that we've been in really from COVID. I mean, we've just been really taking a hit on the dollar. It's over 5.8%. Wow. Thank you, Percival. I was not even up to date with the numbers. That's actually insane. I did actually read that they want to reduce it to 4.2%, something like that. Definitely crazy numbers, right? I mean, we know that the Fed has an inflation rate that they want to keep around 2%. So anything really above that is a little bit frightening, guys. And we're seeing bad numbers here on the US economy. Unfortunately, right, I live in this country. I'm an American. Sadly, I'm betting against the dollar, right? I mean, we are going to see a good recovery this week because of what the Fed, of what they promised, right? In that report that I'll actually, I'm going to link that into the group. I want you guys to read it for yourselves. Very interesting read. But yeah, definitely, we're going to see a very, again, short-term recovery, guys, right? I mean, also that's being expressed here on the yen as well. What's this? I got chat. No worries. I have to follow this stuff too to the spread classes. Oh yeah, for sure. I mean, Forex, stocks, they integrate, right? Being aware of economic events as we are in Forex definitely gives you an edge in stocks, right? Because if you know that we had bad NFP this week, right? Again, NFP is this week, super volatile, really going to move at least the Forex market. There definitely is an impact on stocks, right? The US dollar is linked to the stock market. This represents the US economy, right? This is the economy right here. Again, so definitely, even if you're not going to trade Forex with us, it's a shame because Forex is a cool market. But, even if you don't want to trade Forex, being up to date with the news is definitely a good idea, right? Speaking of news, let's check out what we have for tomorrow. Today was a pretty low volume day. There wasn't so much going on. We have some, we have some New Zealand yen impact news today, right, at 12 a.m. So that's probably going to really pump up the market. We don't really have anything else going on. We have FOMC members, HPI. I mean, it's not really super, nothing really crazy. Obviously, right, we do have a pretty packed week. We have NFP this week. This is NFP week on this Friday. Very, very high impact news. I'm guessing that we are going to see a recovery based on, again, I really want to show you guys the New Zealand yen today, the trades that we took, right, and those sells that we got. What's this? Dollar value directly affect the company's profit to earnings. So for swing and spread trading, it's good to know what company's potential future value is going to be worth. Yeah, I definitely hear that. I mean, I also know that right, the dollar, maybe personally you can educate me because I actually have no idea why. Again, I don't trade stocks, but I happen to realize that there is a correlation between the dollar and the S&P 500. I'm not sure why it does that though, but I've seen that on a bad dollar day, the S&P goes up and then vice versa. Very interesting. Maybe you've noticed that as well. There is, right? Yeah, I've noticed that. It was unintentional. I was just doing a class here for the S&P and I see that it went down when the dollar went up and I'm like, is there a correlation between the two? But speaking of, right, of things going down, we really, right, caught this sell. I mean, I've been telling you guys about this sell for this was like last week, right? We called the sellout on the 24th. I mean, this is all proven. This isn't hocus pocus. This isn't hindsight. You can call me a hindsight trader. I mean, I just think that you're not being reasonable. But I mean, this was called out. This pretty nice trade. I mean, it didn't run all the way down yet, but definitely bearish, right? I mean, the bears really have control over this market here. I mean, just look at the trend line, right? The 21 EMA, we're under it. I mean, we've just been going down. We have this imbalance we want to clear, right? This whole fair value gap that we have. Also, we just have, what is fair value gap? A bunch of orders that have not been, that the market couldn't even process due to the high supply that was being purchased down here. The market cannot even fill in this gap, really. So we have a pretty big imbalance here, right? In terms of order size. In addition to that, we also have this unmitigated order block as well as one down here. Now, I'm personally looking to take profits down here and potentially hold until it goes down here, right? But again, I want to be taking profits as we go. Again, this is on the 4-hour chart. Even if we sell right here, we're still going for 27 pips, guys. That's pretty significant, even 30 pips. And even if we were to hold this whole thing, right, from this swing move here that we're looking to do, that's 80 pips, right? I mean, we're pretty bearish on this thing. I mean, overall, structurally, we're making higher highs regardless of the structure that we're putting in right now. Obviously, if we start breaking this low, we're going to be seeing, this area down here getting tapped, potentially a rundown of this liquidity. But again, that's super long term. I don't think the dollar is going to be that strong going forward. So I'm thinking maybe we're going to get a run down and close out this last area of mitigation, and then potentially this bounce off. That's like the maximum, really looking for those supply zones to get hit. But that's really my outlook on the yen. It has to do with the value of the credit supply going towards market makers and credit holders. Let's read this. When the dollar goes up, the buying power of institutions will typically run up as well. Ergo, bullish opportunities. The opposite is also true. I like to use supply and demand zone, use them as well for long-term plays as well as momentum plays. Yeah, I mean, you probably know about, institutional market flow, right? Bank orders, order blocks, mitigations, liquidity, all those taps. It's smart money, basically. It's the only way to trade. Yeah, yes, of course. Yeah, smart money traders, it's the only way, man. Also, just using, failure patterns, watching how, just look at it, right? Let's look at it this way. It doesn't take a genius to see that we're seeing a rounding top here, right? With multiple wicks rejecting off of this order block as we came to hit that refined zone, right? We had that 50% of this order block get mitigated, giving us that down candle, right? This is totally bearish here. That's unarguable. We've been waiting for this move since down here. We've been waiting for this tap, and we put a limit order on this thing with our stops just at the top of this order block. And look how it didn't even go into the drawdown. Perfect trade. Really, guys, like if you had taken that trade with me, wow, like this would have been, as is at the lowest, a 5-1, which isn't that bad, but depends on your risk size, right? If you're taking a big lot, that would have been, how much would that have been? 60 pips. that would have been, if you use my lot size, a few $1,000s. As crazy as that sounds, I'm not even joking. In 2 days. Forex, leverage has high risk, high reward, right? But if you're using leverage the right way, you can make a lot of money from a very small amount of time, especially if you're counting the moves correctly. Right now, we're seeing that up candle, but we're obviously, as smart money, looking to sell that rounding bottom. As we know, this is a pullback. It is a buyer's trap. It goes by many different names, but we're going to see a little bit of a pull up, right? Just to come back to that moving average and then potentially just crash coming down as we're already halfway there, even beyond that halfway point, right? As we really came down below that wick, right? Grabbing this liquidity, showing us that the market wants to go lower, but short-term bulls are stepping in, but it's not going to be enough, right? The demand is to go down. That's pretty obvious at this point. Anyone taking a buy down here, very risky. Maybe it could be a reversal. Maybe we look at the 1 hour, right? But taking a look at the dollar as well, I don't know. We are putting in a little bit of a structure, but again, it doesn't seem to be enough momentum. Also, we're seeing a volume divergence. Guys, I don't know. It doesn't really seem very bullish to me. If anything, this would be a nice opportunity to get involved in as smart money. This would be a nice little final leg here, and then take profits at this end. Again, going for that quick 30 pips, using a high leverage, high lot size position would be pretty nice at this point. That looks like a drop base and income and like a drop base and drop income to me. I'd be curious to look at it on the daily. Yeah, I can definitely look at it on the daily, but yeah, that's what I'm thinking too. First of all, I'm thinking that's going to come down here. Definitely going to take some partials, right? Because you never know, right? You want to. There's a saying: you never go broke taking money, right? You can never go wrong securing the bag. I mean, we secured over 4.5% on our account today, which is, I guess, 450% return. I'm not too sure how that works in stocks, but that's what Elliot told me at least. I'm not too sure, but yeah, in Forex it's called 4.5%, right? It just means that I've made 4% account gain on my account, which is pretty big, right? I mean, this move here was pretty significant. Again, we're gonna hold that move. Definitely, we're looking at yen continuing that drop. That's gonna be really nice. But obviously, as we know, the dollar is what moves this currency, right? I mean, that's so look at that. Look at that base that we had. This really strong demand zone got tapped again, acting as a propulsion block with some very short-term bullishness. But I definitely think the move's going to be up here. I think we're going to see a nice continued sell. I might actually enter a little starter position on the it says invalid. Jacob just texted me that the link is invalid. So far, this is incline with what I've been showing the spread traders over the past 2 weeks. We've been waiting for the dollar to pull back, and we know that will affect foreign markets as well. Yes, first of all, it definitely will. I can tell you firsthand as a primarily Forex trader that's actively trading this market, the dollar is the most powerful currency, right, in this game. We know that the dollar directly impacts gold, directly impacts the Japanese yen, right? Directly impacts silver. I mean, all these commodities are against the dollar. So whatever the dollar is going to do is really what the yen will do, the gold will do, right? Anything, right? So again, I mean, the dollar is what you really want to take a look at these things. Obviously, looking at supply zones, looking at all these things on the yen, very useful, right? Very important to know what's happening. But it just gives you a roadmap, if you will, price. It won't necessarily guarantee that direction. Really, the dollar is what's going to be your main catalyst, at least using my strategy and how I trade. What's this? Yep. Okay, I don't know what you said you have to, but I can show you on the daily if you want to take a look at that. Show the daily. Yeah, I mean, just look at the daily, right? I mean, you're seeing a pretty nice rounding bottom, pretty big engulfing bear candle, right? I mean, this is on the daily time frame we're talking about. We're seeing a nice little pullback, but again, it's not going to be enough. We're definitely going to get that mitigation that we saw on the 4 hour get cleared. Again, that's on a small time frame move. I would like to see this move getting ran, but I don't know who's talking here, but I might have to mute you here. Again, let's make that small. There we go. No, let's make it. Okay, whatever. That looks like an almost textbook base drop. Well, I'll tell you what, I mean, that's what I'm looking for, right? But I mean, we put in such a strong structured move. I mean, with this rounding top, it could be, right? You never know, though. I really would like to see how the market reacts to this demand zone, right, that we put in here. I really would like to see that maybe there's some kind of Wyckoff, maybe there's some kind of accumulation. Whoever is talking, could you please mute yourself? I'm just gonna mute you, I guess, whatever. Sorry there. Wait, who is that? Who is making all that noise? I don't know who that is. I don't know. No idea. But I would like if you could mute yourself. That would be very appreciated. I would appreciate that very much. Thank you. Again, yes, it could be. Let's see what you said here. That move was impulsive. I'd almost guarantee it. Yes, I know it was an impulsive move. I know that it's most likely going to continue down. But again, I mean, looking at the higher time frame structure, I mean, we are looking pretty bearish. But if you look at the whole thing, right? I mean, even if you take a look at the monthly, I really want to show you this, first of all. So, I mean, I know you're a way better analyst than me. Of course, I'm not comparing me to you, but I would like to also show you what I think. I'm kind of happy you're watching me. I always see you giving analyst plays, so for you to watch me is very humbling. LOL, I wouldn't say that, brother. Forex is your baby. I appreciate that. Thank you very much. Send my name for FOR 4x, you know, I don't even know how to pronounce it, but moving forward, right? We did see that impulsive move, right? But look at that structure that we put in with that move down. Again, this is on the monthly time frame, that really higher time frame, right? We had this move down. We can delete that. That's not really relevant. That was from a class from before. We moved down here, right? We came. This is a Wyckoff schematic. That's not. I'm not going to detail right now, but we moved up, right? We put in a pretty nice structure, and look at that. We came where to mitigate that final order block that we had that was never mitigated, never touched, never been closed and opened, positioned by the banks, by the institutions, right? By the composite man, however you want to call this magic entity, the tooth fairy, doesn't matter. They left a position open here. We need to come close it. Now we're moving down. But if I want to show you guys this very significant rejection, showing us that the market potentially has more room to come down. So Percival may be correct in that down move. And I'm actually anticipating a complete reversal, I guess. I was going to say a regression of price back down to this unmitigated order blocks that we had, potentially looking down lower. But again, I'm also supported by the fact that if you take a look, same time frame wise on the dollar index, we're seeing, right, and we know that we have this order block down here got mitigated, right? Got basically making order block 2.0, which pumped up the next one, right? And we see basically a 3-try failure pattern by the bears to push this market down. But as we know, the Fed, even though inflation is gonna really take a big hit, right, to the market, to the economy, we're about to see a huge financial recession. Don't get me wrong. I know of that. Like I've been extremely bearish on the dollar. I've been saying I'm gonna start linking stuff into the Forex chat. I want you guys to look at this stuff yourselves. But like, guys, we're gonna see a pretty big recession. Like inflation has been going up, used cars have been going up in value, gas has been going up. Right. I mean, this is pretty bad times economically. We're pretty challenged, and the Fed is just really ignoring these issues, saying, "Oh no, it's going to be okay. We're going to do a rate hike on the dollar." Wow, guys, please mute yourselves. I don't know who that is. Thank you. I shouldn't have to ask multiple times, right? I mean, other people trying to watch this, but that being said, right? I mean, the Fed's just kind of. We'll cross that bridge when we get there. And I think that's a terrible approach to it. And they're just kind of ignoring it. Just like in 2008, they didn't address the issue. Yeah, the subprime mortgage bonds, you know, they're all good. You don't have to worry about it. What happened? Huge recession, right? I can literally show you that drop in 2008. If I'm not mistaken, that was this. Let me move the screen. Let me see. Yeah, right here. All this moves down here. I mean, 2008. Yeah. Look at those moves, right? I mean, it's just a complete drop on the dollar. What's this? Right, that's the giveaway. The banks were told they could move money again, and the first thing they're going to do is add that loss prevention money back to the books. That's the impulse. You're gonna have to get used to muting people. Sometimes they don't realize they're live as well. Yeah, I know. It's unfortunately a very common experience for me. But yeah, definitely. You know, I do believe in the recession because, as we know, people are very news oriented. So if the Fed says, "Oh, we're lowering interest rates to 0.25%," which is, you know, a pretty good interest rate on the dollar, what's going to happen? They're going to move up the dollar, right? And that's really what we saw here on this monthly candle. I mean, I know it looks pretty insignificant, right? But again, I want you guys to think about something. This one individual candle is all of June, all of June's price action, all those up moves, those down moves, all those whatever the hell is represented by this huge engulfing candle. But look how it still fails to not even reach that top. Now, I am a believer in that short-term recovery. I do believe that. Why? Because we need those sells, or sorry, those buys to sells, right? Those let me draw that out real quick. Those up moves to bring the market down lower. Why? Because of liquidity. The market cannot just drop down. It gets exhausted, right? There needs to be that transfer from weak to strong hands, right? We need to see those buys to be sold. We can't just, you know, so we're going to see a very, very short-term recovery. I'm looking for maybe a few months, but, you know, that inflation is really going to catch up with us, guys. I mean, we're going to see that reversal. We're going to see the Wyckoff occur on the monthly, on the weekly, whatever time frame you want. We're going to see that transfer, that exchange, right? I really go into this more in depth in the mentorship. For those of you who are, I know that we have a few people in the mentorship with us tonight, if I'm not mistaken. I know Nikki's with us tonight. Hello, Nikki. She wants to join the mentorship very soon. and that's very awesome, right? Really go into this stuff, really in depth, really showing you guys how to read charts the correct way. But I'm giving you guys just a little bit of the taste of the strategy and that ideas, right, happening, I guess now. But again, it's not in depth like I would do in the mentorship. Speaking of ideas and being shared, if you guys would like, I can check out some tickers. This strategy, smart money stuff, works on any single market. Forex, stocks, futures, doesn't matter. 2007 was a housing crash, and lenders saw that coming many years ahead of time. That's why the dollar got destroyed back then. Yeah, but the Fed, right, first of all, I don't know if you know, was saying, oh yeah, they were not addressing the issue. Because think about it, right? What does the government like to do? Does it like to actually deal with the problems they have and like, increase taxes and like make people work hard to reduce that inflation? Or are they really gonna blow up and inflate the US dollar? And judging by how the way that they're choosing to take it, I'm betting more on the fact that they're going to probably inflate the dollar, make it go up, 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 avoid it for as long as they can, hoping maybe it'll go away. Maybe some kind of thing will come and save them, but it's just going to collapse, right? I mean, we've been seeing really bad numbers here in the dollar. I'm a very firm believer. Again, I'm going to say it again, that the dollar is going to crash. WLTW. Okay, so let's take a look at some stocks here. Before we do, I would like to take a look at stocks. Oh, no, that's my personal list. Let's take a look at SPY, right? Let's take a look at what happened today on the SPY. Where is that? I have no idea. Where is the SPY? SPX, there we go. Let's label that. Cool. Alrighty. So the SPY, right, really made a nice higher high. Wow, look at that, huh? On the monthly. Really pushing up today. But let's take a look on the daily, right? The monthly is not really significant, as the SPY is always moving up, right? I thought we were on the daily, if you will forgive me. Okay, here we go, right? So we got that push down just like we expected, below that moving average. I'm grabbing some liquidity that we left. We have an open order down here. So I really wanted the market to come down and grab that. We discussed that also last week in last week's video as well. There were a few open orders here, but I think this was actually more of a propulsion block, right? We had the moves down, got mitigated, right? Got tapped and then gave us these moves down, grabbed some liquidity, came, closed out that order, and then pushed up. And we've been putting up a pretty nice bullish structure. We have some liquidity gaps here. It's it looks like a little bit dying down. Maybe we might see a little bit of a pullback, but definitely bullish. So the market's a little bit making a nice recovery. That's really nice to see. The market is going up again. That's awesome, right? Awesome stuff. Smart money never listens to what the government says. They look at the final policies put in place, but the comptroller and whatnot. I assume comptroller, you mean composite man. But the Fed just plays the everything's okay game while the financial markets actually deal with things like consumer inflation. Yes, very true. I don't actually listen to what the government says, right? I'm actually looking at the numbers. I'm looking at doing my own research, looking at the dollar, and I'm watching a lot of economists like Peter Schiff, for example. Peter Schiff, super known economist, very bearish on the dollar. I love watching his podcast. Definitely learn a lot from him. Big mentor of mine. Huge fan of his as well. Frankly, when they say things are fine, I'm bearish. Yeah, man, we're on the same wave. First of all, we have to do some kind of some 2v2, like on some forex trade, man. Showing you can trade use your knowledge here, make some nice killings here on forex. It'll be nice to trade with you one day, maybe. It'd be really cool. But yeah, the SPY put in some nice action here. Let's take a look at that stock that got recommended by, I think it was this to make sure. I want to make sure it was right. Ellie, make the time, we'll make that happen. Yeah, private message me after the class, man. I would love to talk to you. Let's put that in. Oh, I was looking at yeah, I assume that it's Willis Towers. Okay, let's take a look at that. Oh no. Oh, I'm such an idiot. My bad. I meant to add that to my watch list. I'm so sorry. Let's put that in again. I assume it's this one. I'm guessing. Let's see the chat. Will do. Awesome. Looking forward to it, first of all. Okay, so on the daily, wow, guys. I don't know who was that who asked me for that stock. Let's see where it is. Eugene. Okay, Eugene. Wow, let me tell you something, man. This thing is pretty bearish. I mean, just look at this thing yourself, man. Right, we've been seeing a pretty nice bearish structure, that really nice sell-off point. We're seeing a nice recovery, but that bearish engulfing candle really just showing us that the market really wants to come down. You know, we might see a nice recovery. I'm looking at this area down here potentially to get filled. But oh, let me just draw that out for you. Right, I'm looking for some kind of bounce down here at the demand zone, but definitely we might see some kind of you know kind of stagnant price action for just a little bit and then just a complete drop. I mean, we have a pretty nice imbalance here. We have some order blocks down here that never got tapped as well. I'm pretty bearish on this thing. Maybe if you want to get some puts, if you're asking for like put wise, yeah, that's a good idea. But buy and hold, more like wait for a price to rebound and then buy at that dip. But I mean, overall, we're in an uptrend, right? But I mean, this downtrend is just super impulsive. And I think that the bears have not finished what they started here. I mean, I could be very wrong, right? You know, I guess tomorrow we would see, but just judging by that daily price action, maybe we can take a look at the 4-hour for you real quick to get some kind of direction sense, bias wise. Bias wise, right? We touched that 21 EMA. We're coming back down. We could see kind of maybe a potential, maybe some kind of this order block here might hold and actually push this market back up and fill this imbalance. Maybe I could be very wrong. I would like to see how the market reacts, but at this point, I mean, we did have that failure pattern being put in, right? The market did make some higher highs. Maybe this actually might be a reversal. Now I'm looking at it in the 4-hour. Maybe I was wrong. Maybe the market doesn't want to come in fill these imbalances. Maybe it actually wants to take a higher prerogative, right? I mean, we had this demand zone. I mean, it never got filled, right? It never got mitigated, but maybe, you know, we had this order block, which actually propelled the next one. I'll tell you what, Eugene, would definitely want to see how price opens up tomorrow. And we'd like to see, you know, if it goes up or down, depending on how price starts to move, right? Wait for that maybe pullback and then the second leg. At this point, you don't know. You just don't know, right? It could be, but I mean, look at the volume too. The bulls are very weak, right? Very, very weak. We're seeing a volume divergence. I'm pretty bearish, man. I'm not gonna lie to you. I'm pretty bearish on this pair, on the stock. I'm sorry. But you know, it could be a reversal. I doubt it, right? Personally, but it could be. It very well could be. We'll have to wait and see on that, depending on how it opens tomorrow. I would like to see maybe a continuation back down to mitigate that. At that point, you would know that this is a downtrend, a confirmed downtrend, and at that point you would be selling. But this might hold, you know, you don't know. But more likely, I think that it might be a sell situation, if I'm being totally honest. What's this? That's what I'm looking for. Yeah, that's a call credit spread setup. I don't even know what that means. What about NKE? I mean, I assume that's Nike. I'm looking for buy puts. I'm already setting up pullback. It's already setting up to pull back more. Yeah, I think that it's gonna continue. I'm pretty bearish on it as well. And Square, you want me to look at Square? Okay, Nikki, for you, I'll do anything. joking. Look at Square real quick. Then I'll take a look at Nike. Don't worry, I didn't forget. Yeah, we've been looking at Square really recently too. You know, we're on this nice little like downtrend kind of channel. I don't really believe in channels so much, but I mean, they are nice to like really see, especially where price is going. We're kind of in this indecision kind of area. I mean, we are seeing a nice, you know, push up, but I mean, we have this like overall downtrend. I really would like to see a kind of break of structure. We know we have like some supply zones up here that we want the market to really come and reach. At that point, we're expecting maybe some kind of continuing to move up, maybe reach this trend line. You know, obviously trend lines are not what I use to base trades on, but I'm not going to sell this trend line. You know, I'm not an idiot, right? But you know, definitely kind of mixed. I mean, there is no clear direction. I mean, we are, you know, we're making lower lows, right? I mean, showing us the market's a little bit in a decline. Hard to say. It really is hard to say. Maybe if you take a look at the weekly, that could be maybe take a look at the weekly. I think that would be a little bit more conclusive. Right, we had a really nice, you know, move up, right? That really strong rally, right? So definitely bullish, right? Definitely, you know, this thing's gonna go up at a certain point, but you know, we are making some pretty, you know, bearish structure here. The bears do have a not total control, but definitely have a grip on Square. I mean, you know, that's pretty obvious. I mean, you know, these moves down, they can't be ignored, right? I mean, the moving average is showing us a little bit of a nice pull up, but I think we might be seeing some bearish action here. I mean, just looking at the way it's moving, I'm skeptical. I don't know if Square right now, maybe if you're looking for short-term option plays, I wouldn't be a buyer. I wouldn't be so much of a believer. Also with Bitcoin tanking, I know Square is directly related to that. Um, I I, mm, I really would say Square break of 249. I think break of 249. Okay, 249. You think that Square is gonna break above 249 and continue above? I mean, it certainly looks that way, right? I mean, taking a look at the daily at least. Let's take a look at the daily here. The daily is moving up pretty bullish, but I mean, we are seeing those like little gaps, right? It's moving back down. I think the momentum might be a little bit dying down. I'm looking more so of it to reach like this kind of area here that we have, maybe find some kind of, really would like to see the reaction. Definitely wouldn't be a buyer at this point. We're going for what is that? 10 ticks. What's it called? Ticks, right? 10 ticks. I don't know how much, I don't know how significant that is for you stock traders, but 10 ticks doesn't seem like so much to me. Again, I don't trade stocks, so I don't know. Based on what, Nikki, what do you think? Oh, why do you think? Yeah, I also don't know why he chose that number. To resistance zone ticks. Yeah, I don't know why 249. Now, I'm not trying to be mean. Oh, you're talking about this. This is a very small rejection. I'm looking more at this demand area here as a main component of that ceiling, if you will. There was a request to look at Nike, so I'll take a look at that real quick as well. I hope that helped. Actually, I'll give you a better answer. I'm sorry, I don't want to leave you like that, Nikki. I would really, really want to see this area get hit and then maybe see some kind of, maybe a pull back down, maybe a continued move up. We've marked this down since last week, really. We've been looking at this area to get hit. I am not so much of a believer in Square. If I'm being totally honest with you, as crazy as that sounds, I'm not so much of a believer. I don't have so much faith in this stock. That being said, let's take a look at the next stock. I hope I helped you a little bit, Nikki, but yeah, I'm sorry if I didn't. I'm gonna keep moving here. Okay, was this? Yeah, watch out for the price advertising confusion. And I'm with Or here. Square is too risky. Definitely very risky. AT&T, I'll take a look at that, and I think that'll probably be the last one for tonight. Nike, wow, look at that huge imbalance, right? This is why I don't trade stocks, guys. Forex doesn't have stuff like this. I mean, at least on the high volatile pairs, on the high liquidity pair, on the high liquid pairs, no such thing as gaps like this. From what I know about institutional levels, the market usually comes and corrects itself with this gap. I really don't know about stocks if it does have that demand to come and fill that. I mean, I don't know. I don't know why someone would trade this. I mean, if you get slipped, right? If you're selling this market, you would get slipped so fucking hard, right? I mean, wow, like what does that jump from 135 to 152? Wow, that's crazy, right? I mean, T is fantastic for dividends. Holy, that's overreaction fiber. So I'm playing puts on this tomorrow. Yeah, definitely looking for that imbalance to get filled, right? There's not even an imbalance. That's just a liquidity void. If you guys know anything about liquidity, I'm Sir Percival, definitely a way better trader than me. So he definitely knows I'm like, a kindergartner compared to him. So gaps, liquidity voids, I'm sure that he's already well versed in this stuff. He can tell you as well. This definitely looks like it's going to get filled. I mean, the market can't just leave a bubble that big, right? There has to be a placement of orders, right? We know that trend and continuations are like chains, right? You want to have mitigated chains, not just gaps and voids. You don't want to see those, right? I mean, obviously. Let's take a look at that final stock here. By the way, I want you guys to see the irony in this. I'm a 100% Forex trader, and I'm giving you guys a class about stocks. I find that very funny. Okay, sorry, but those kind of gaps are not really a catalyst, and it's not always correct. That's how I make money. Yeah, definitely, right? I'll be taking puts on that as well. Yeah, I find that very funny that I'm a Forex trader giving you guys a stock market class. What was that last one? AT&T, right? Let's take a look at that for the last one for today. We have like around 5 minutes, so I'll just take some questions for you guys, and I guess I'll call it a day. I'll take a look at the last stock, which is AT&T. Yeah, very good dividend stock. Honestly, I'm a very terrible stock investor. You guys could probably teach me about investing in stocks. I have lost so much money in my portfolio. It's not even funny. All I know how to do is trade Forex, guys. That's really my knowledge. AT&T, I can tell you at least this much. Moving kind of disgustingly. I probably wouldn't want to be involved in this. I mean, we are seeing actually a little bit of a creek, right? I mean, we're seeing that volume divergence kind of move down. And we're seeing a little bit of that kind of bullish push. Actually, let me take a look at the 4 hour real quick for you guys on AT&T. Real quick, let me see. I mean, here's the thing, right? What's this on the chat? The principles of Forex are not that different from stocks and ETFs where charts are concerned. I'll talk to you about dividends when we talk. T is possibly ready for an iron condor or put credit spread. Bro, you're talking to me in Chinese. I don't know anything. That's tough. But I'll tell you that, yeah, I would love to talk to you. First of all, definitely you can teach me a lot of things, man. I very humbled when it comes to talking to someone that knows a lot more than me. You know, I know my place definitely, which is a beginner, I guess, compared to you, right? So definitely a lot to learn from you, man. I would love to get to know you better, man. Definitely. That being said, right, taking a look at this, I mean, we're seeing a little bit of a, I guess it's kind of, what is it, parabolic SAR, right? I mean, this thing pretty parabolic, right? I mean, with that pretty parabolic setup and then that crash, this was like a pretty nice manipulation, actually, right? I mean, that really move up just pumped and dumped, right? I mean, this looks kind of a little bit manipulated, and now we're just seeing that reversal. I'm not a believer in AT&T. I think that maybe it's nice. It's a good price to get in. I think it might move a little bit down more. Yeah, I'm not so much of a believer. It looks pretty downtrending at this point in time. I mean, right? I mean, look at that yourself. Does this look like a nice stock to be in? Probably not. If you're looking for puts, maybe. But I mean, we have this area down here that never got filled. I think we might get the man zone might get ran and closed. You know, that seems like a pretty nice possibility. What's this? I'm teaching LOL. Catalyst move. It'll start to chop next week or so. I'll go into it. Yeah, I don't know. I mean, I think this liquidity might get ran. I mean, just looking at how it's moving, again, I could be very wrong, but it doesn't seem very bullish to me. I mean, we are seeing a little bit of a volume divergence, a little bit of a creek, if you will. We might be seeing those stop orders above here, right? All the stop loss orders might get just ran and move up. Honestly, I think that might be the case. We might be seeing a manipulation of those stop loss orders. That would be a really nice trade to get in on right now. But if that's not the case, then you might want to have your stop loss below this low, because at that point, if you're breaking below that low, we're definitely going to run that. We're going to run that liquidity. I mean, nothing really stopping you from doing that, right? Keep that in mind as well if you're doing puts. I don't know what you sent me here. What is that? I'm not going to take a look at that right now. I'm sorry. That's why I said it would chop. Yeah, you know. So we have around 2 minutes here. Does anyone have any last minute questions? I guess we're done for tonight. Unfortunately, I haven't paid for Zoom. I think I'm gonna buy it, but I only have 40 minutes to do these classes, sadly. But yeah, if you guys have any last minute questions before we go, maybe one last stock before I go, that's gonna be it for tonight, guys. I hope you enjoyed it, you know, regardless of the fact that we're about to end. And I'm gonna post this video for you guys to view. Again, it's gonna be in the class archives of the Forex chat. I'm gonna show you guys that one more time. I showed it previously, right? Class archives right here. It's gonna be posted. I'm gonna post that right now. It's gonna be available for free, no paying, no nothing. It's totally up to you guys if you want to watch it, you know. Thank you. Definitely welcome. Nikki, I'm still looking forward to starting with you. That's gonna be very awesome. And I'm looking forward to anyone who's interested in joining the mentorship, right? That's gonna be a very hands-on experience. And I'm looking forward to anyone, right, who really wants to take their learning to the next level, right? That's gonna be really awesome to work with you. But yeah, that being said, I guess no more questions. So I guess we're gonna end it for today, guys. And definitely nice seeing all of you guys. Thank you for coming out, and I hope you guys learned a little bit tonight with me. And I'll see you guys tomorrow for the next class. Again, 8 p.m. same time, same place. All right, guys, take care. Thank you.